Hello and welcome to the Tax Roundup for June. And welcome, and it's good to see everybody again. Inside this Tax Roundup, we're going to take you through the latest on JobKeeper as we move from the eligibility to the compliance phase. Now, many of you would have seen the article in the Australian Financial Review the other day looking at the ATO's investigation into the $11 million JobKeeper claim. The ATO is also actively courting tip-offs from employers that are potentially manipulated their circumstances to meet the eligibility criteria. But first off, across to Michael Carruthers, who's going to look at a softening of the rules on the work from home expenses. Across to you, Michael.
Well, as a result of lots of people working from home during pandemic phase, the ATO has issued some, concessional treatment for those who might now be incurring additional expenses to what they're used to incurring, and has offered basically a concessional rate that can be used by those people. Now, for some time now, it has been possible for taxpayers who do work from home to either claim a deduction for their actual expenses incurred while working from home. So figure out what the actual costs are, come up with some reasonable apportionment method for those costs. Or alternatively, there has been the option of claiming basically a cents per hour rate. And at the moment, that's 52 cents per hour. Now, at the moment, however, the ATO has recognised that you have a number of people who might be working from home who don't normally do so, and that there may well be additional expenses associated with that. As a result, the ATO has issued a PCG, which basically provides a third alternative for claiming those home office expenses. Essentially what it does is it allows people to claim a rate of 80 cents per hour, but that would encompass basically everything involved in working from home. For example, when someone is working from home and using the 52 cents per hour method, that covers some of their costs, but not everything. Those people can then separately claim a deduction for things like home, phone and internet costs, and also depreciation on things like their computer. Whereas those who are choosing to apply the ATO's new 80 cents per hour rate will not be claiming any additional things for things like internet, phone and computer depreciation expenses. So it basically kind of wraps up everything in one go. So it's an option. It isn't necessarily going to provide taxpayers with the best tax outcome. For those who have records available, it's worth doing a comparison on different methods just to see which method provides the best outcome. And then taxpayers are ultimately able to choose which method gives them the best outcome. It is expected that taxpayers will be able to justify the hours that they've worked from home. You obviously don't need to come up with details of actual expenses because the rate that the ATO has set kind of does that for you, but you are expected to keep some record of hours that you've been working from home during the relevant period. The other thing just to point out here is that the ATO seems to be taking the view that even though you might be required to work from home for an extended period of time, some months maybe, and that is the only place where you're able to work for a period of time, that doesn't necessarily mean you can claim a deduction for home occupancy costs, things like interest on your home loan and rent expenses. The ATO says that you generally need more than that. If you're normally based in your employer's office, you've had to work from home temporarily because of COVID-19, but that is just a temporary arrangement, then it probably doesn't change anything in terms of being able to claim occupancy costs. Now, to some extent, that might actually be a good thing for some people who want to be able to preserve a full main residence exemption when they sell their home later on. So for those who are just temporarily working from home, greater scope, maybe some additional methods to claim those home office type expenses. There's a few different ways we could go about calculating that, come up with the best outcome, but it won't normally mean, or it doesn't generally lead to the conclusion that you can claim things like interest on your home loan or rent.
And now back to Michael for that wrap up on JobKeeper compliance.
For the last month or so, a lot of us have been quite absorbed in dealing with JobKeeper matters. And while we're kind of moving more into the administration side, the ongoing compliance side in terms of providing additional information to the ATO each month, the ATO has over the last few weeks released some pretty important updates in certain areas when it comes to the JobKeeper scheme. And thought it would just be worth bringing you up to date on some of those key developments. The first one is around the monthly declarations that need to be made to the ATO. Now, this is one of the conditions that just goes along with participating in the JobKeeper scheme. You participate in JobKeeper, there is a requirement that you provide a monthly declaration to the ATO providing certain information. That includes turnover information, current turnover for the month that has just ended, plus projected turnover for the month that you're about to move into. Now, normally that declaration would be due within 7 days of the end of each month, but the ATO has recently extended that deadline so that we now have 14 days to provide that information to the ATO. Now, the thing just to remember, though, is that the ATO won't generally be paying JobKeeper payments to relevant entities until the ATO has received that monthly declaration. So while it's good news that there's an extension of time for entities to gather that information and submit it to the ATO without getting into trouble, many clients will still want that done as soon as possible so that they can receive the cash from the ATO. So there probably will still be quite a lot of pressure from clients who really need that money from the ATO and really want that declaration to go to the ATO as soon as possible. The other thing just on those monthly declarations to clarify, we've had a lot of questions on this, is what information are we using when it comes to turnover methods? Basically, what the ATO has said is that whatever method you used to calculate your GST turnover for the turnover reduction test in order to qualify for JobKeeper, you would use that same method for your monthly declaration data. So, for example, if you have a business that normally accounts for GST on a cash basis, but used an accruals method in order to pass the turnover reduction test, then that monthly declaration, the calculations of GST turnover should be done on an accruals basis as well. Just needs to be consistent with whatever method you used to pass the turnover reduction test. The other thing that came out a few weeks ago was a law companion ruling dealing with calculation of GST turnover. And it's taken a bit of time for some of the key themes out of that ruling to filter through, because I think there were quite a few entities that did some turnover reduction calculations based on maybe a cash basis or an accruals basis, and at a high level felt like they weren't able to access JobKeeper or might not be able to access it until later in the year. Well, what the ruling confirms is that while those methods can potentially be used, they're not the only methods that can be used. And in fact, they are, in a sense, administrative concessions offered by the ATO. The way the GST turnover calculation actually works is you need to look at the relevant period, so a month or a quarter from a JobKeeper point of view, and identify all the supplies that that entity has made during that period. So if it's an entity that provides services, what are the services that were actually provided during that period? Well, they are the supplies that have been made. We then go about determining a value for those supplies. And that's the number that actually goes into our GST turnover calculation. And it might be something quite different to what we would come up with if we were using the GST attribution rules, a cash basis or an accruals basis. Now, the good thing is that the ATO says we can pretty much use any of those methods within some kind of boundaries. So for clients who appear to fail the test on a cash or an accruals basis, don't necessarily give up. There are one or two other options that might be available, and it is worth having a look at that default method. What supplies were made? What is the value of those supplies, regardless of whether invoices were issued, regardless of whether cash has been received from customers. Some people are finding that they can actually now access JobKeeper using what actually is the default method for calculating GST turnover. That ruling, LCR 2020/1, has a lot of useful information in it. I suspect that over time will actually be quite a useful reference point, not just for JobKeeper, but for certain other purposes as well, in terms of determining whether clients might need to register for GST, determining whether payments might be subject to GST or not. There's some really nice, neat summaries of GST concepts in that ruling. Another bit of guidance that's come out from the ATO is a PCG looking at integrity concerns around JobKeeper. And the good thing about the ruling or the guidance is that it gives us not only an idea of the sorts of things that concern the ATO in the JobKeeper realm, but it also gives us an idea of some things that are actually okay. The ATO says we're not worried about these things. And where I'm kind of getting at there is particularly around service entities and internal management fees within a closely held group. And the ATO has a number of examples dealing with service entity arrangements and says that where service fees or service entity fees are adjusted to reflect changes in external trading conditions, The ATO doesn't necessarily have a problem with that as long as you're doing things, in a reasonably consistent way. The service fee reduction is consistent with the impact on the trading business based on external trading conditions as a result of COVID-19 or other things that might be going on. So there is some comfort potentially for those who have service entities who may not be able to access the special rule dealing with service entities, but might still feel like it's appropriate given circumstances to make adjustments to service fees. Again, it's well worth having a look at that. If you hadn't come across that yet, and you do have clients with service entities, labour entities within a group, well worth taking a look at the examples provided there. On the other hand, though, the ATO does point out some areas where there are concerns. These are the sorts of things that the ATO might be worried about. And we're already seeing some real-life examples of the ATO becoming aware of entities that might have taken steps, artificial or contrived steps, to access JobKeeper. We can expect, I think, the ATO to come down pretty hard on those entities where they see things going on, where there's manipulation of invoicing, asking customers not to pay invoices by a certain date, that sort of thing. Any suggestion of that going on, we can expect the ATO to take a pretty hard line, I suspect. The final thing just to mention is that there will be some businesses, entities looking to access JobKeeper, and there has been a fair bit of uncertainty around this point, where they're trying to nominate an eligible business participant, a sole trader, partner in a partnership, director or a shareholder of a company, or an adult beneficiary of a trust. In order to nominate an individual under those rules, you not only need to meet the basic turnover reduction test and the carrying on business test, but you do also need to meet some other conditions. You need to have an ABN at the 12th of March. You also need to have given the ATO some information around sales made during certain periods. On tax return for 19 or certain activity statements would be the most common way of dealing with that. But there are lots of situations where entities don't meet those conditions. Maybe because their 2019 tax return hasn't yet been due. Maybe they're not registered for GST. Maybe they report GST annually. There's a whole bunch of reasons why entities might not have met those conditions. Well, the Commissioner does have the discretion to extend the deadline for meeting those particular conditions. And the Commissioner has now issued an application form that can be used to seek that discretion. Really important point here, though, is the ATO says do not nominate someone as an eligible business participant if you need to rely on that discretion until the ATO has actually exercised that discretion. You can't just assume the ATO will do that because you think you have a strong case. The ATO says apply for the discretion, wait to hear back from them. If it's granted, then you nominate your eligible business participant under the JobKeeper rules. So quite a lot going on still in the JobKeeper space. To some extent, things have settled a little bit, but there's still a fair bit of work to be done for some clients who maybe haven't qualified yet, still testing whether they might be able to qualify later on. These rules are still going to be quite important to keep our eye on over the coming months as the JobKeeper scheme plays out, and possibly with maybe further developments and tinkering by the government as the year goes on.
And that's the tax roundup for this month. For those of you that haven't registered for Knowledge Shop PD as yet, it's live online on Tuesday the 6th. We'll look forward to seeing you online then. But also as we come into the new financial year, we're loading all those standards and information that you need to manage clients on the knowledge base now. So look up that we will advise you by email and also on social media. If you're not a member of Knowledge Shop, of course, we are live and active as always and here to help you through whatever is occurring inside your practice. So give the Knowledge Shop team a call or visit the website and book on a tour. We'd be really happy to show you what we're doing at the moment and how we can assist you inside your firm and working with your remote teams as well. We'll look forward to seeing you next month. See you then.